the Financial Survival Network. Now more than ever.
And welcome. You are watching and listening to the Financial Survival Network. I'm Kerry Lutz. It's 12/27/21. This is our last show with our good friend John Rubino for the year. And there's a lot to talk about. John, you got to start it out with that Henry Miller quote first.
Hey, Kerry. Yeah. Well, okay. For this to make any sense, we have to kind of roll the tape back a bit to 1930s Paris. It was in the Great Depression. Everybody was out of work. There was zero upward mobility. Nobody really had anything coming in, and it was full of starving artists because that's Paris, and a lot of those guys. Because they had no chance of actually succeeding in a depressionary world, they just started living in the moment. They went to cafes and hung out and had big philosophical arguments, and then they went back and did their art just because that's what they love to do. And they realized, or at least a lot of them realized, that that's a much better life than striving for success. And there's a kind of a semi-famous quote from a writer named Henry Miller from that time. And it is, I have no money, no resources, no hopes. I am the happiest man alive. And, what's interesting about that is that attitude is cyclical in human society. We had those guys at that time during the Depression. Then the hippies who kind of dropped out of normal society in the 60s, the slackers who dropped out of society to an extent, at least in the 1990s. And now we're seeing this phenomenon worldwide where people are just dropping out of the workforce. Everybody's baffled by how this could be happening, how people just don't seem to want to work, and everybody businesses are actually shutting down and bank branches are being closed and hospitals are having to scale back their services because they can't find enough people to do the work. And it's in small part because of the whole pandemic thing, but a lot of it is that people just don't want to go back to work after having been out for a year. A lot of millennials, they moved in with their parents, they got those stimmy checks from the government, which covered most of their expenses, such as they were, and they had one or two government safety net programs they could draw on. And they found out that life is much nicer when you're not, jumping out of bed in the morning, getting cleaned up, jumping in your car, driving for a half hour or an hour to get to some work that you hate, and then doing that work for 8 hours and then going back and repeating the whole thing again, day after day after day. Because there really isn't much upward mobility in today's society, and wages are very low because they've been squeezed so dramatically by corporations over the past 10 or so years. If you look at a chart of wage growth relative to corporate profits, you see corporations have been making a huge amount of money at the expense of their workers. And so workers now realizing that life without an upwardly mobile-ish job is actually kind of nice, and so they don't want to go back. So now the lesson from all of this is that if we're going to get back to a normal economy, employers are going to have to pay way up to convince these guys who have figured out that there's an alternative to go back to their old jobs, which means wage inflation is going to be a much bigger deal going forward than maybe a lot of people think it's going to, because that's the one part of the inflation equation that may not be transitory is wages, because companies are going to have to pay up, and workers realize that they have a lot of leverage now, so they can get their signing bonus this year, but then they're going to organize, form a union, and demand a lot more going forward. So wages will go up almost certainly. I mean, barring a tip into a depression from here, which is a real possibility. Possible. Yeah, that is very possible. But barring that, if the economy is still going to grow at 2 or 3 or 4% a year, it's going to have to feature 5 or 10 or 15% wage growth. And that's the kind of inflation that freaks the Fed out. They really focus on wage increases, and they're going to see that. So they're going to be under a lot of pressure to deal with it. So that's the big dilemma of the year ahead is, do you raise interest rates knowing that it might blow up the financial sector? Or do you allow wage inflation to pull overall inflation up into double digits official? It's already in double digits in reality, but the official numbers are 5 or 6%. But if the official number goes up to 10 or 11%, double digits, the official number, that is destabilizing too. So these guys have to choose which kind of chaos that they're going to usher in the year ahead. So 2022 is going to be a really interesting year because that's when these decisions have to be made. It's not going to be very long before the Fed has to decide which way it's going to roll this time.
Yes.
And I suspect they'll go for inflation because deflation is scarier to them. But that it's not going to be a picnic. 10% inflation is chaos, and we might easily get that because of the whole wage thing.
Absolutely. It's Sophie's choice. Which kid do you give up? And then you'll lose both of them anyway. So it's really no choice. Like I've learned recently, my kids are here for the holidays. I've learned about the metaverse and this thing called the Oculus, where you basically could just exist in the metaverse and not worry about the real world. That's like another trend here that kind of goes with that Henry Miller thing. It's a lot more fun in the metaverse. There's a lot more possibilities there, and you don't have to worry about making your rent in the metaverse. It's made for you, I guess. And I don't know if you've come into contact with this thing or not. I'm kind of afraid to put the thing on because you can get nauseous from it. But, the metaverse is definitely a trend for the coming year and probably the coming decade.
Yeah, I actually bought an Oculus set. Actually, it was one of the competitors, but a virtual reality set, maybe like 5 years ago. And it was too early at the time for there to be a lot of interesting stuff for somebody my age. So I ended up selling it to a gamer, a college kid who would put it to good use by playing video games and stuff. But yeah, virtual reality and there's another term anyhow, where you're still seeing the room around you, but there's all kinds of other stuff that can happen in the room. There can be UFOs flying around or strippers or whatever, whatever you want to have come into your room, it comes into your anyhow. This is very interesting in a lot of ways and very powerful because from a work perspective, it can put lots of people in the same room working together, no matter where they are. So it's a Zoom meeting taken to the next dimensional level. And so it's a real thing. And for most people whose lives are not very exciting, it's a way to pop yourself into a place that's way more exciting than the four walls around you. So it's a big market out there, but it's also, it's really limiting in a lot of ways. And I think there'll be a rebellion against it at a certain point because real is just on, in most levels, much better. So if you can create a real physical life around you that is interesting, that's vastly better than living in something like, the Ready Player One world or whatever. But I think a lot of people are going to be seduced by this, just like a lot of us were by the internet and then by social media. It's the next step. But it comes with so many downsides that this is something we're going to have to wrestle with to try to get the good from these things, from virtual reality, augmented reality. That's the other thing. Reality. Yeah, so to get what's good about those things without the horrendously bad side effects, that's going to be our challenge. And
probably
I don't know. I'm not optimistic.
Not up to it, that's for sure. The whole AI. Hey, we should each do 3 predictions for the coming year. You do 3, then I'll do 3.
Okay, I'll do the 2. Well, I did the first one, wage inflation, very big deal going forward. The other 2 are gold goes up, stocks go down. And there are very good reasons for each. If you have time today, we could talk about why those 2 are probably true.
Yeah, definitely. Tell us, share your thoughts with us.
Okay. Right now, just from a technical standpoint, the stock market is wildly, precariously overvalued right now. And market breadth is the thing that you're going to be hearing about a lot going forward. That is basically the number of companies that are going up relative to those that are going down. And in a healthy stock market, most companies' stocks are going up in value. That's good breadth. And bad breath is when the market is still going up, but only a handful of stocks are pulling the rest of the market up. And that's what we've got now. We've got just, the big tech stocks, basically, and a handful of others like pharmaceutical companies and stuff like that, that are up, whereas maybe 5 times that many companies are down. In other words, below their 200-day moving averages. That traditionally, historically, that's kind of thing that happens before the market rolls over, and those last 7 stocks that were pulling the market up stop going up and start going down, and then there's nothing left to support the market. And we're kind of in that situation technically right now. So I think leaving everything else aside, what happens in the economy, what happens in geopolitics, what the Fed does, I think just market breadth is enough to tell us that stocks probably won't have a very good year in 2022. And, let the Fed raise interest rates and then forget it. It doesn't matter what market breadth is, the stock market is tanking. Now, gold, on the other hand, does well in an inflationary environment. And if we're going to have inflation and the Fed, dithering and then raising interest rates and causing a crash and then backtracking completely like it always does, and going back to aggressive easing, that's probably 2022 in a nutshell right there, the whole thing. That'll be good for gold. And, gold might have a correction when everything else gets sold off, but it will be one of the big beneficiaries of the Fed capitulating. So it'll be a V bottom again. That's my prediction for precious metals. So bad for stocks, temporarily bad for gold and silver, and then very good for precious metals.
All right, here's my 3. For 2022, I believe that Elon Musk will become the savior of humanity in that he will personally save capitalism, because right now, if I extol the virtues of true capitalism, or you do, we speak to the converted, we're preaching to the choir, really. Nobody's going to listen to us, certainly no millennials and no Gen Zers. However, when Elon Musk says something, those people listen because they hold him in such high esteem. He relates to that generation. He's 50 years old now, I believe, and those 20-somethings, 30-somethings really hold him in high esteem, higher than any politician, any economist, any doctor, anybody. He really is their number one person. So I believe that through his preachings, and if you saw his recent interview with the Babylon Bee, he's totally into free market and limited government. He's a voice that we have needed in this realm, in our sector here, if you will, in our philosophy that has been lacking since perhaps Thomas Jefferson. All right, so that's number 1. Number 2, you're going to laugh at this. NFTs will become the primary form of asset ownership on the planet. I know it's ridiculous. I think it's a solution in search of a problem, but the NFT bandwagon is leaving the station, and basically, a lot of it is for laughable kind of stuff, but NFTs you'll own an NFT, which will give you the Empire State Building, or you'll have an NFT, which will, you'll own Dolphin Stadium in Florida. NFTs will become the primary form of ownership in the U.S. And number 3, Congress will elect to take all its bribes in the future in cryptocurrency.
Okay, well, Kerry, my predictions were so prosaic compared to yours.
Well, it's got to be interesting here, but yeah. I'm curious about Musk. When I watched him, I didn't so much watch him for what he was saying, because, I agreed with a lot of it. That's neither here nor there. but I watched him from the standpoint of what the younger people will think. Right now, they're transfixed by AOC and modern monetary theory, and the kind of the inverse of the Rolling Stones song, which was "You can't always get what you want, but if you try, you'll get what you need." Well, MMT is you can get not only everything you need, but everything you want. All we have to do is print more currency. And he is probably the leading opponent of MMT when you get down to it, John.
Um, Elon Musk is?
Yeah, he's against any further subsidies for
Oh,
oil or gas. He's really more into free market libertarianism, which is what we believe in, but he's a much more attractive spokesman for it. And either you or I or anyone we know in the sector could be, whether it's Mises or Murray Rothbard or Milton Friedman, he's much more effective at it than any of us.
you said opponent of MMT.
Yeah, he's an opponent.
I'm sorry. I thought you said proponent of
My
MMT, which I
mistake.
didn't understand because that, yeah.
He's the leading adversary of MMT. Because
Yeah.
saying you can't have the government running everything. They do a lousy job of everything. But you do want them running things like the FAA because you kind of don't want a free market in air travel, right? Where you just take off any flight path and hope for the best, right?
Hmm.
So there are legitimate functions of government. And, you could theoretically have a competitive atmosphere for air traffic control, but probably transition. We might see a lot of planes coming down, but really, I think he is the leading proponent of free market economies and limited government in the world, and I think when he speaks, people really do listen. So I find that interesting. The NFT thing, I mean, we don't even comprehend where that thing is going because my kids would rather have an NFT than a deed to a house, right? If the NFT gives them the deed to the house, they're all for it. It's like it's much more tangible to them than going to the county clerk's office and filing a deed. So, and
Well,
then
I definitely recognize that trend. The assets are going digital, and it's clearly something that has just gotten started and probably has further to go. But I think longer term, I would take the other side of the argument and say that the people investing in NFTs right now and in digital assets in general already have their physical needs taken care of. They already feel like they've got the physical side of life nailed down. And when that becomes precarious, in other words, when it turns out maybe you don't have the stuff, access to the stuff that you need, then you kind of start focusing again on the physical, on the real. And at that point, digital assets will be sold off. And I don't know when that happens, but it could be a market phenomenon. Let stocks tank, let cryptos get pulled down along with stocks, and you'll see a liquidation of all the assets that are based in cyberspace rather than the real world, and a retreat to homesteads and houses in safe neighborhoods, that kind of thing. So we'll see. I mean, that's a very dire prediction about the world in general. That's not a happy world, but I think that's a world that is coming based on our current finances, and I think it'll affect digital assets pretty dramatically when it happens.
all right, so let's go to a tangible asset. It's one of your favorite indicators, especially in terms of economic indicators. I know you watch RV sales every month. They're setting records, and it's been like that for all of 2021. And they're saying that it's going to be like that in 2022, partly due to the pandemic, because you can take your RV and go park in a wide open park or in a wilderness area and not worry about any communicable diseases. But also, there's a sense of freedom. There's a guy here in Florida, Traveling Robert, and he It's a Cuban refugee with his parents, came here many, many years ago, a little younger than you and I. And he basically got to give up his job. He travels around the country in his RV. He makes music. All of the music in his videos is his own production. And he's great. He's really great. And he has, super chats about RVing. So Winnebago loved him so much, they made him a brand ambassador. He gets a free trailer, new Winnebago trailer every year. And all these companies selling products for RV lifestyle. He's a spokesman from. He's making hundreds of thousands of dollars a year. Plus, he's on Spotify. He's making money off his music, which he was a DJ. I don't think he ever made any money, real money, off of it before. And it all goes with those record RV sales, John.
Well, RVs, their role in society have changed so dramatically lately that they're not the indicator they used to be. It used to be that booming RV sales were a crash signal because RVs were a big toy, usually bought by somebody that already has a house. And when sales of stuff like that boom, that used to mean that people were over optimistic and that we were towards the end of the cycle. And that you could short the RV makers because as soon as the markets turned down and the economy started to drop into recession, everybody had to sell their big toys. They would dump their boats and their RVs and their motorcycles, and the RV makers would crash. And so you could make money shorting them. Now, in this world, RVs are the last remaining affordable housing. So there's huge demand for them out there from people who don't have a house. They're not buying their RV as a toy because they own all the other toys, and this is the last one that they don't have. This is where they're going to live to avoid being homeless. So, the world has become a much, much darker place, and RVs are now an indicator of how dark this world is. When RV demand booms, that means you have this huge, huge segment of the population that is one problem away from homelessness. And an RV is the last stop on that trip, And so in that sense, it's kind of also a crash indicator, but a different kind of crash indicator. It's a sign that we have impoverished such a big part of the population that's going to lead to some gigantic problem in the not too distant future. So yeah, the whole van life thing and the boom in RVs, that's yet another indicator of us dropping into a depression in the not too distant future. In which case, a lot more people are going to want RVs. So RVs will probably still go up. The worse things get, the more valuable RVs will be.
Yeah. Well, you saw used cars, basically all of the every car company on the planet had a captive finance arm, and they were underwater on all of their leases and all of their financed cars because of easy financing. But the inflation has effectively made these companies solvent now because all of their assets, which were underwater, they're now worth a lot of money. So it's actually bailed out the car companies. The other prediction, a serious one I will make for 2022, is wage and price controls are probably coming. And I think you see indications of stealth wage and price controls if you buy into the fact that precious metals markets might just possibly could be manipulated through futures markets and options markets. Then what's to stop them from doing it for, say, items like oil, natural gas, everything else, every other commodity? And we've seen these interesting cycles where these commodities like copper, nat gas, oil peak, and then they crash. And you have to wonder if there's not a shadowy hand behind them. I'm not alleging a conspiracy here. I don't know that it's happening. It just seems to me that if one commodity is manipulated, then they probably all are. And that's a form of wage and price controls right there, price controls, certainly.
Well, governments won't hesitate to manipulate the commodities markets for sure. And if they can do it through 4 o'clock in the morning futures contract dumps and get away with it. Maybe this lasts for a while, but actual wage and price controls are really, they're the last gasp of a government that has completely lost it. And they don't know what else to do. That's the kind of the analog of vaccine mandates and pandemic lockdowns and things. It's when you have nothing left to do except some really crazy coercive thing that probably won't work, but the alternative is not to do anything and be blamed for not doing anything. That's when you get wage and price controls. We're not there yet for overt measures like that in the US, but we may not be that far from something like that, because all you need is for people to conclude that inflation is no longer transitory and then start acting accordingly by buying everything they're going to need in some basic sense for the next 2 years right away. You go to Costco and you just buy your whole year's worth of toilet paper and on down the line of life's necessities. Which then pushes prices up even more, which causes more panic buying. If you get something like that going, governments are going to feel like they should step in. And the only way you can do that is with wage and price controls. And that's a catastrophe. That never, ever works. But, each new generation of would-be dictators thinks maybe they can pull it off where their predecessors can't. They never can. But yeah, that's a thing that's coming probably too.
I think it's definitely coming here, but hey, a lot of interesting trends on the offing. In any event, if you haven't gone there already, go over to John's site, dollarcollapse.com. Subscribe to his newsletter. If you got a question for John, shoot me an email, kl@kerrylutz.com. And you can subscribe to our newsletter at financialsurvivalnetwork.com, both free, like the best things in life, John. And Happy New Year, Merry Christmas, all that to you and yours, John. We'll talk to you next year.
Thanks, Kerry. Talk to you next year.
The Financial Survival Network. Now more than ever.